Imagine watching a chart in real time as XRP slams directly into the $2 support level. And instead of collapsing, it rebounds with force, absorbing every sell order like a machine that refuses to break. Now imagine that exact moment aligning with a global shift in liquidity, a changing Federal Reserve tone, and one of the strongest macro setups XRP has had in years. If you understand what that combination means, you know the next move may be bigger than anyone expects. Right now, you and I are about to walk through the hidden signals, the macro catalysts, the liquidity pressure, and the technical structure that explain why XRP defending $2 might be the beginning of something much more significant. Before we go deeper, I want you to think about this. If XRP can hold the $2 line during a period of rising liquidity, what happens when the real liquidity wave hits? Hold that question in your mind, because the answer becomes clearer the further we go. Let's break everything down step by step. Why did XRP defend $2 so aggressively while other altcoins hesitated? It's a fair question, one that deserves a serious look. The reality is that $2 isn't just a round number. It's a psychological hinge point, a technical pivot, and a liquidity magnet. When price hits that zone and refuses to break, it tells you buyers aren't just stepping in, they're defending. That kind of reaction means someone with size has decided the level is worth protecting. Strength leaves clues. Institutional liquidity often hides in places retail doesn't see. What happened at $2 was a perfect example. Underneath the candles, large buy walls formed. Thick, deliberate, intentional. This wasn't retail bravado. It was structured defense. When a level with massive liquidity interest aligns with a bullish macro environment, the market often responds with explosive follow-through. Liquidity reveals intention. If you visualize November 2020's consolidation or the spring of 2017, you can almost feel the similarity. A slow grind, a key level, a strong defense, and then ignition. XRP's bounce at $2 carries the same energy. Traders call it a reaccumulation response, where whales quietly reload instead of exiting. These patterns often precede the market's most powerful upside waves. Real support doesn't lie. Here's something worth considering. Support is only real when both fundamentals and liquidity are aligned. Right now, XRP has an unusual advantage, a macro environment leaning risk-on, and a token structure built for late cycle strength. XRP typically behaves like a sleeper asset early in cycles, but when liquidity expands, it becomes one of the biggest movers. Timing matters more than hype. A trader once told me, XRP doesn't pump when you expect it. It pumps when you've almost forgotten it can. That line echoes loudly right now. Historically, XRP's largest rallies began during moments of doubt, when retail turned silent and whales quietly entered. The $2 defense has that same signature energy. Cycles echo the past. What made this bounce even more interesting is that it happened while Bitcoin slowed down and the liquidity indexes rose. That dual signal matters. An asset showing strength while the leader hesitates is a sign of uncorrelated demand. And when uncorrelated demand emerges, it often signals a structural shift. Confluence creates confidence. Market analysts often describe $2 as both a psychological barrier and a structural checkpoint. When assets defend a structural zone after a breakout, it usually means the new floor has been accepted. Acceptance is one of the most powerful forces in any uptrend. Levels tell stories. If XRP remains above $2 for multiple days, it changes the entire outlook. Trend continuation probability rises drastically, and the early signals are almost always subtle, decreasing volatility, flattening sell pressure, and increased buy-side reaction. Moves start quietly. Before we continue, if this deep breakdown is helping you understand the real structure behind XRP's price action, tap the like button, comment $2 defended, and subscribe for your next XRP Daily Brief. The algorithm pushes harder when you do. Let's move on. What happens historically when XRP defends a major support level during a liquidity expansion? You see it repeatedly: a slow buildup, a long sideways grind, and then a violent upward breakout that catches everyone off guard. XRP is a late mover, but when it fires, it shocks the market. History whispers truth. Right now, XRP is showing a classic volatility compression pattern near $2. These patterns form when supply begins to thin out, while demand slowly increases. It's like watching steam build under a pressure valve. The longer the compression lasts, the stronger the eventual release. Pressure breaks ceilings. Think of it like a spring being pushed downward slowly. Every dip gets bought, every sell-off gets absorbed, and the spring keeps tightening. When it finally releases, it doesn't rise gently. It snaps upward. XRP's consolidation is the spring. Tension fuels motion. Don't focus only on candles. Focus on reactions. Candles show price, but reactions show intent. And the reaction at $2 was loud. Buyers stepped in without hesitation, absorbing liquidity as if they were preparing for the next leg. Reactions reveal truth. A lot of people miss this. Sideways movement isn't weakness. Sometimes it's accumulation. Market makers often stabilize an asset around higher lows to absorb liquidity quietly. And when altcoins consolidate while Bitcoin cools, it often signals a stealth rotation. Sideways hides strength. Watch the $2.20 to $2.32 region closely. That's where real supply sits. Retail traders obsess over round numbers like $2, but professionals look at the zones where liquidity actually clusters. When these zones break, algorithms activate and push momentum forward. Smart money thinks differently. And here's where XRP becomes uniquely interesting. Liquidity is rising and supply is thinning. When those two forces combine, assets can move faster than anyone expects. Markets love imbalance, and XRP is entering one. Liquidity fuels speed. If macro conditions continue trending risk on, and XRP holds above $2, the setup for a larger surge is both logical and likely. XRP doesn't need hype. It needs liquidity and structure. Both are forming right now. Big moves start quietly. Combine this with global market context, and the signal becomes even clearer. We're entering a moment where liquidity is increasing, rate cut expectations are rising, and risk appetite is returning. When macro aligns with technicals, assets with utility often outperform. XRP sits in a rare position: regulated, recognized, liquid, and deeply integrated into global financial conversations. When institutions begin reallocating capital into digital assets, especially under a risk-on backdrop, they focus on assets with structural advantages. XRP has those advantages. And here's something retail always misunderstands. The biggest moves come when no one is paying attention. By the time the headlines arrive, the move is already half done. XRP has always behaved this way. Watching early signals, not hype, is how smart traders position. If XRP continues defending the $2 zone while liquidity improves, this isn't just another bounce. It's a structural setup, a foundation, a moment where the market shows its hand before the next leg. XRP defending $2 wasn't random. It was deliberate, controlled, intentional. Everything about the reaction, volume, absorption, stabilization points to strength, not weakness. Combine that with the emerging macro backdrop, the improving liquidity environment, and XRP's own historical late cycle explosiveness, and it becomes clear something is forming. Tomorrow's episode breaks down the exact breakout levels XRP must clear to confirm the next macro leg higher, and the hidden signals most people won't see. Not professional advice. Consult a qualified expert as needed.